Welkom terug, welcome back. We are going to broaden our horizon a bit. We've been talking about China, mainly about China so far, but of course Asia is bigger than only China, and we are going to talk about Asia as the new continent, as the growing continent. And joining us from Hong Kong is Alexander Davey. He's Senior Investment Specialist Asia and China Equity at HSBC Global Asset Management. Alexander, welcome. Alexander is going to discuss the fundamentals and share his vision on investing in China. Alexander, welcome. Like your predecessor, Vanessa, it's a late evening for you as well to do this presentation.
Yeah.
Yes, okay. Like your background? This is not...
I bought it in specially. It's literally just behind me.
Yes. See, yes. quite large as well. What is it?
It is. I'm not sure whether it's Stephen or Stitt. It's one of the lions that sits outside the HSBC main building here in Hong Kong.
I see.
And have done for many years, but obviously with the addition of the pride insignia around the outside of it as a picture as well, but the lion central to HSBC obviously, and very strongly part. In fact, within the culture here, we had the lions were covered for a little while, and when the lions were uncovered, you had queues of people going to touch the lion feet because they believe that would be it's a sign of very good luck. So they're centrally part of the kind of HSBC in Hong Kong motif.
So that's what they do just before you're off to the casino then?
Yeah, well, COVID kind of stopped that, but yes, theoretically.
Okay, well, you're going to talk about the broader investment opportunities in Asia, and we got your presentation ready, so the floor is yours.
Thank you so much. Thank you very much to everybody in the audience for listening. Looking to be taking about 20 minutes and then very happy to take questions. So if we can move on to the initial first slide with the graph Asian equities, where are we now? Let me talk a little bit about the broader Asia picture. I know you've heard a bit about China more generally. But GDP forecasts
if I may interrupt you, the slides are not that big, so if you can talk us through what we're actually seeing every now and then, that would be very helpful.
Absolutely.
Thank you.
So within the graph here, the far side, which is the red bar, there's the GDP growth for Asia ex Japan as a whole, and that's coming in around 7% now. Now I'm sure we've had prior speakers talking about the impact that China has within that, but it's a broader sort of smorgasbord of countries that is actually making that up, and particularly going into the second half of 2021, we're really starting to see a catch-up play from the South Asian nations, the ASEAN region, and also increasingly India. If we've been looking at the headlines over recent days, there's a little bit of extrapolation to be put within that, but there's certainly the caseload of COVID within India has come down dramatically. And at the same time, we have a lot of talk of opening up within the ASEAN nations, Singapore making steps towards that. The rate of vaccination within Malaysia has shot up very quickly. So we're starting to see this kind of potential exit pattern. But it's been very supportive potentially for growth within these broader economies, not just China, but beyond that. And at the same time, it can be argued whether we're starting to see a slight slowing in the China economy that may come in slightly lower than initial expectations were. But if we said Asia versus the rest of the world, we see two things. One, the GDP growth looks good. Secondly, we've had very positive earnings growth. So if 2020, when we saw this rise in equity markets, was about a kind of revaluation, then 2021 and into 22 has been more about earnings growth. So actually companies really starting to develop those earnings. What does that equate to? Well, earnings growth in 2020 was negative 4%. In 2021, we're looking at an estimate of positive around about 36%, and in 2022 estimates are around about positive 12%. So we're seeing this real positive earnings growth at a company level. And also we should look at the valuations, Asia ex Japan, Asia as a region, is certainly more attractively valued still than global equities if we look at the MSCI All Country World. So at the end of August, that was 14.4 versus 14.6. Intra-region, if we were to look at capitalization, we still see quite a big disparity between the small cap world and the large cap world. And this year, actually, to date, small caps have returned about 20%, 21% Asia small caps. That's on a par with the S&P 500. So they've outperformed the large cap market, but they still lag in terms of the valuation gap. Is still at a pretty historically wide level versus where we've tended to see large and small caps trade. So forward looking, earnings growth can continue to drive Asia. GDP growth looks contractive, particularly relative to other regions. Asia seems to be catching up in areas which have had a more challenging 2020 and 21. China remains relatively buoyant and able to continue to grow into the late 21 and into 22. So if we may move to the next slide. So on this slide, I'll talk you through what's on here. The critical point within this slide is that what we've seen is a change in the positioning of the economies and a change in the makeup of these economies, particularly with Asia beginning to gear and change and focus more on what might one call new economies. So if we could look from the far left to the next bar, the immediate first left bar is the 2016 MSCI Asia Pac ex-Japan. And then 2020 is the next bar along. So we have a 4-year change. And what we see is a big growth in the consumer staples, discretionary, healthcare and information technology sectors. So this real change of exposure to growth sectors, new economy sectors, sectors that will be driven by a number of the thematics, which I'll come on to, which can drive the economies over the future. We don't see that. So the next set of bars is the same graph, but for MSCI Europe. And we see that that's been really relatively static. There hasn't been a particularly big change within those areas. And for the US, we do see a bit of growth. If I could make a contentious comment, I guess, between 26 and 2020, is how much of that IT growth, which is the purple bar, may be attributed to Asian companies that have actually listed on the US market via the American Depository Receipt System. I haven't split that out, but there's a sense that we have got big growth companies in America that are domestic US, but the US market has become a listing venue for a number of companies, and particularly new economy companies. And in the broader emerging markets, that picks up a similar theme because it gets that kind of halo effect from Asia. So, you know, it's a similar idea there. But so we're exposed to these new areas, and we've got rising disposable income and aspirational outlooks to drive this potential consumption in a number of these areas. So Asian equities looks attractive versus global, and certainly it's geared towards some of these areas that we will thematically, we think, see growing over the coming decade. So to move quickly to slide 4, because I'm sure it's something you may well have covered in prior sessions. This is really just one of the cases for the fact that China is a really important element of the story over the coming decade. But in part just because of kind of the anomaly that is, given its size, it's underrepresented in the global markets. It's making up a higher proportion of both global emerging markets in Asia by constituency. But if we look at that, if China A takes up its full inclusion at some stage, the flow from passive investing is going to number something in the region of $370 to $400 billion just to move to that. Now, that's not talking about all of those who may be in the audience or in broader audiences who will have a strategic asset allocation where they're going to have to make a decision how they weight China. And that's, I think, the very interesting decision for us when we think about Asia and when we talk with a number of our clients and asset owners is, you know, how do you deal with China? How do you deal with Asia? Do you pre-position for these changes which are very likely to come, which means you're taking a tactical view now to maybe wait for the market to catch you up, or even a strategic play and making that move early because you believe that's where it's going, or do you sit back for a while? Given some of the challenges particularly from regulation over the last few months. I dare say there may be some who are sitting back a little on that decision making, but it's a fascinating idea as to what you do. The easiest parallel is Japan in the late 80s. We are Asia ex-Japan now. We weren't originally. We were Asia Inc. Japan, but Japan became too big a part of that and then spun out. Now, I'm sure China watchers wouldn't necessarily wish the various lost decades of Japanese investment on the China market, but clearly there will come a point where portfolios may become Asia ex-China or GEM ex-China, and that allocation just becomes one on its own. The final point I'd just make on this slide would be that the A-share market looks very different to the offshore market. So if you looked at the Hong Kong market, a little bit to a degree the Taiwan market, but certainly the Hong Kong market, market is still currently more value-driven, traditional cyclical type companies, whereas the A-share market is much more demonstrative of the domestic China market. So the makeups are quite different, therefore the return patterns are different, and also the buying patterns still are quite different onshore in China, with the retail investor being a much bigger part of daily flow than the institutional investors, even though they are beginning to make up a larger proportion of that market over time. I'll move on to the next slide, if I may. So this idea of innovation is pretty central to what's going on, and technology and digital adoption. And that really is becoming a big driver for what we see within a number of these markets. And it's also becoming part of the overall story. We see this baked into 5-year plans in China, into Japan, into South Korea. South Korea, Taiwan are very, very heavily skewed towards this kind of area of innovation and technology. And also the makeup of those companies is increasingly important from that perspective as well. Now, over the last couple of years, particularly the last 18 months, we've seen that export-driven nature of demand has been very, very positive for a number of the economies within Asia, because that really has been what's driving the story, because a number of the things that have been globally in demand are manufactured or made within this Asia region, and that's been highly advantageous in markets like Vietnam, Korea, Taiwan, and clearly China. The interesting thing will be how that plays out over the course of the next 12 months, as we maybe see a slight shift away from that export-led recovery and a more reliance on domestic consumption or regional consumption. But certainly it's been positive. And there are other areas within Asia that can take up some of that slack, most notably India, being again a very populous nation with potentially a much bigger growth dynamic. I know we certainly are looking at a growth figure of in excess of 6, maybe 7% GDP for India next year. So really picking up very nicely from a fairly torrid time in 2019 with the banking crisis and non-bank financial sector issues that they had there. So if we can move to slide 6, please. So I think one of the comments that I'd make as we think about the Asia market is increasingly that it is mega trends that shape the nature of the way that these markets trade and move, rather than, and therefore it becomes about the individual stocks rather than the beta play per se. We would say as HSBC Asset Management that we see an equity risk premium of around about 7% for the Asia ex-Japan market. That's come down a little from the start of the year. But within that, there are individual stocks that have a far greater return potential. And there are 2 or 3 big dynamics that we see really driving the Asia market. And they're not just separated to Asia, but are definitely pretty important. Aging population, as I'm sure has been mentioned before, a big issue for China and a number of other markets within this world. And that's leading to areas such as increased healthcare spending. And also, therefore, it is also driving very strong research and development. That's very firmly part of the China 5-year plan that was ratified back in February this year, originally launched November last year. Technological innovation has been a massive driver in Asia and will continue to be so. Areas such as 5G, the Internet of Things, AI, connectivity, driverless vehicles, electric vehicles, all of these elements, semiconductors particularly, have been very, very much at the center of that. And have these knock-ons to the sub-investable themes. Societal changes, particularly if we think about lifestyle consumption upgrade and a very, very strong rising middle class in very highly populous nations, that consumption opportunity is huge just within the Asia region itself. On the far right, we have some of the kind of sub-investable themes. I'm going to cherry pick two from that. Digital solutions I'll come to a little bit in the next minute, but financial access, I'm going to pick up some to do with credit cards, but I'm going to mention one other thing that's not on the next slides, which is insurance. It seems strange, that usually doesn't excite many people. We usually talk about insurance for many unexciting reasons, but actually, if you think about a number of the Asian markets, the penetration of insurance relative to developed markets is quite low. China is a hugely good example of this. And as insurance penetrates greater, and instead of these one-off big single premiums, renewable term and renewable premium insurance, it's an enormous opportunity because you have 1.6 billion consumers in China. You have 1.5 billion consumers in India and rising. You have many billions throughout the rest of up to a billion throughout the rest of Asia. So that market from a financial services perspective is really quite dynamic. And again, the rise of the middle class moves into, and rising consumption moves into that sector in a way that we might not necessarily immediately think versus luxury goods or consumer electronics. If we can move to slide 7, please. I'm going to spend 30 seconds on this because I'll speak to the graph because I know it's not so clear, but the black dots represent smartphone penetration. If I just tell you that in the US, Germany, and the United Kingdom, smartphone penetration is around about 80%. And in fact, many people have more than one smartphone. In China, it's roughly 60%. And in India, it's just between 20 and 30%. But let's backtrack again to a comment I've made before. The population of those two nations put together is 2.8 billion. The population of the US, Germany, and the United Kingdom is probably roughly 600 million. So if we assume that smartphone penetration moves up to that same level, you can see the importance of both the chipsets and everything that goes into smartphones and everything that is the downstream effect of having a smartphone. And the secondary thing is infrastructure. In India, it's highly unlikely that there will be an infrastructure that builds landlines. It doesn't make sense, but there will be an infrastructure that builds for 4G and then 5G. So again, the infrastructure around that is being designed to be developed along a new technology base rather than an old technology base. If we can go to the next slide, please.
Sorry, again,
yeah.
Just a question. Why would it make sense to have landlines in India? Because you have very big cities over there.
It's from a perspective of just developing the infrastructure. You're seeing that, if you're given a choice of do you want to go for old economy, sink a landline, dig up lots of things, have to redig it, have to move, update, all of those kind of things. It's versus trying to move straight to fiber optic cables or whatever the newer technology is. There is a move towards that newer technology as the first base because it's easier to use, it's less disruptive. And you think about that, if you were given, my son doesn't actually understand, he's 9 years old, and I'm trying to explain to him what a landline phone looks like. And it doesn't filter in the psyche of whatever the next generation is, but younger millennials and the next generation, they can't get their head around the idea of a landline, but they can use a mobile phone better than probably you or I, with like one go at it. And that's really the generational shift that we're seeing. But for a largely populous nation, you're seeing this real kind of change of, okay, well, we can move straight, we can miss out that stage and go straight to the newer technology, which is fascinating, but also has a massive knock-on impact of what you're able to do with it. If you think that the Apple iPhone only came out in 2008, I think 2008, 2009. Apologies for not getting that date completely correct. But you think about this. Yeah. You think about this. Particularly in the COVID era where we've been doing everything online. With the acceleration caused in the last 2 years is just incredible. But we order food online, we get deliveries, we get all of this stuff, and yet that's a decade dynamic for us. So the pace of this change is just phenomenal, and I think Asia really has got itself at the forefront of a lot of this, and a lot of technology companies globally want to sell into Asia as well because of that. I'm going to move on to a slide, just mindful of your own time. This is perhaps just to dwell on a similar kind of theme, which is credit card penetration, particularly in Indonesia. Indonesia is a population of about 360, 380 million. India, as we've already seen, vast and well over 1 billion, 1.4. You've got a very small number of people using credit cards versus developed nations, but we're seeing this real change of dynamic as a number of companies move to that, and that's something that we've looked at more within portfolios, and also the idea of e-wallets. So actually moving on and really kind of stepping over the credit card, just putting it straight on the phone. Again, back to this point about if you're skipping the old technology to the new, you can just go straight to that use of technology to do that. So we see that as a fascinating development over the next decade. But going back to my mega themes, that's technology and consumption and lifestyle upgrade all being put into one, but it manifests itself in the financial services sector, and particularly with some individual banks in both ASEAN and also India. So really interesting from that perspective. You may already have heard that one of the areas that China was very visibly less interested in cryptocurrency, but they are talking about having their own electronic currency, and in fact road testing that in a number of merchant venues within both Hong Kong and China during 2021. Now clearly that's going to be actually linked to the yuan in itself, so it has a kind of physical backing, but it really is the idea of moving to a more electronic version. So again, very interesting to look at, but I think for us really interesting from the idea of kind of credit card or credit card replacement. I've got a couple more slides just to finish off. Mindful, I've probably got 2 minutes left. If I can go to the next slide. So I just wanted to pick up two specific stocks as examples, ones that we've been very interested in for a number of years, and really just talk about how they've navigated what's going on, but how they're demonstrative of both the opportunity and also the forward-looking environment. The top stock is a fabulous semiconductor company. That means that they design the kind of overall functionality of chips and semiconductors that go into phones, among many other things. Now, the reason I've put the R&D spend on there is because they have a very big US competitor. Their biggest problem was that when we were in the 3G world, they under-invested in research and development. And when 3G moved to 4G, they were unable to take advantage of that particularly well, because they hadn't invested in the way that the world was going, and therefore they lost market share and ground quite dynamically. Now, I think what's been very interesting for us in watching that is you see this enormous ramp up in R&D spend. And I think this is part of this technology dynamic, is a lot of companies that are now doing really quite well are those that recognize the dynamic, and where they've needed to have put the R&D spend in up front. And yes, they've been a beneficiary of maybe an abnormal environment, but actually we saw this move where you have almost a perfect storm for the semiconductor world, where you have supply-demand dynamics, meaning that chips can't get to where they need to be. You have more and more demand for those chips, and you have a fewer and fewer number of companies that are at the cutting edge of that. So this particular company is certainly the market leader within Asia, but its R&D spend ahead of the 5G ramp-up has meant that it's really been able to capitalize on that demand, particularly China-led, and as other countries come into that, but also it's done well out of this COVID dynamic, and it continues to be a key part of autonomous driving vehicles, the move towards electric vehicles. The real demand for all of these kind of technology that sits within those is very high, and the amount of technology is much higher than in the cars we may have driven 10, 15 years ago. The bottom is an example. Of
course, we'd like to know which company this is.
Yeah, it is Mediatek.
Mediatek. Okay.
Yeah, Mediatek. Yes. I can answer since you asked me, because I'm not allowed to say it otherwise.
Okay, no, that's why I asked you. Yes.
And then the bottom company is it's interesting because again it's a little bit about this diversification effect that we see, but also coming back to the prior slide. It's a Southeast Asian company that originally was a leading internet gaming platform. They had a very good penetration within the ASEAN market. And they had one or two games which were very, very highly used, and they managed to sell very, very effectively into North Asia. But actually, over the last 2 years, they've diversified into financial services, and particularly looking into Indonesia. And they really are starting to take advantage of that kind of diversified model. The addressable market share for e-commerce in 2020 that they could have accessed was about 77 billion. The estimate for 2025 is 236 billion. They have the platform. And I think this is the key thing that I've made the point about the R&D spend is it's in the good old days, I think almost the Buffett example used to be, moats and barriers to entry. But in the platform and digital age, it's once you've built the infrastructure and you've taken a reasonably market leading position, it makes it hugely difficult for other companies to pick up and challenge you. Because you have a captive customer base and you have the ability to deliver to them. Your only barrier is your own ability to do that. If you wrong step or you just sit on your laurels too long, that will allow some catch up. But we've seen with a number of companies, the Alibabas, the Tencent within the China world, in Southeast Asia, these companies that they're able to really create this dynamic and then diversify out. And a number of them have looked into moving on from gaming to things such as online music and e-commerce. And I think that e-commerce and others play back into those big themes that we see of greater consumption, technological innovation, and obviously this rising monetization, rising middle class.
Alexander, regarding the time, I think it'd be a good idea to go to your summary remarks.
Of course. So summary remarks is on slide 11. So as I said at the outset, look, we think Asia presents really strong fundamentals and competitive valuations versus the rest of the world. We see that really good earnings growth. And also it's going to be supported by the fact that there's been very good use of cash on balance sheets. So Asian companies have remained, they've actually been paying out at good levels throughout the COVID pandemic, but they have very good, strong cash balances, so will continue to do so. And historically, dividend payout has been a strong part of the overall total return from Asian companies. We've got this incredibly strong focus on innovation. And we've got these secular megatrends which are supporting that innovation and that ability to actually deliver that outcome, but over the coming years and frankly decades as well. So there's a supportive macro environment, supportive broader environment. We strongly believe that individual companies will shape Asia's development as well. And it is about those rather than just necessarily picking the beta. So we very much believe in bottom-up, strong, high conviction portfolios. Thank you very much, and apologies for running a little over time.
Thank you very much. I'll have a look here if we have still any questions in the room about Alexander's story. Any questions here? I do want to get back to a question we got in one of the earlier presentations that said, the question was like, it wasn't really a question, it was a remark, said China is like Japan in the 80s. Aren't we being too over-optimistic about what all these countries are achieving in a very short of time, and we project it to the near future, whereas we've seen Japan, it somehow stumbles and doesn't live up to the expectations. Is that the same? Do you think it might be the same with a lot of the other Asian countries? Like China?
I think China will probably, it's a more of a command economy. They are gliding the economy down from GDP growth, this year was estimated around 8.9% originally. I think it'll probably come in a little lower than that. But their 5-year plan has got them moving gradually down to a sustainable level in the 5.5% level area. But that's then predicated on delivering all of the things that they believe that they can do. So I think there's a lot of forward planning is going on there. There will be some shocks to that, and there's clearly a degree of caution for a lot of us as we see how some of the regulatory changes play out. But then, I think there is a reasonably strong vision as to what they want to achieve that we could argue maybe wasn't the case for Japan. I think the broader, Asia dynamic is very interesting because it isn't just China. China clearly has an impact, but we have other companies within the region where, they take advantage of China, but there is an increasing dynamic within India. If we think about India being the most populous country on the planet within the next decade, probably the next 5 years, as India develops over the next 10, 20 years, that equally has an important impact on both the global economy, but particularly the Asian economy and that consumption pattern. And then also this demand from the US, from Europe, for the services and goods that are required out of Asia. So I don't think Asia has just linked itself to being a one-off, it's China or nothing. I believe that I think China is probably going to manage to, manage its economy as best it can to not have any big surprises over the coming years and decades, and I think will probably fare better than Japan did in that respect.
Okay.
And I think Asia is more broadly developed.
Okay, thank you very much, Alexander from Hong Kong. Thank you.